Thanks so much for joining us today for our Small Firm Practitioners Update Roundtable. It looks like we have a somewhat manageable size group today, unlike yesterday's 200 participants. So after we go through a little bit of housekeeping and some introductions, we will invite you guys to actually unmute yourselves if you have a question or a comment. We'll make this a little bit more conversational. I know that everybody is kind of going through this unique work situation in their own way, and I think that there's a lot that we can learn from one another through this discussion today. So we're really glad that you're all here and hope that you find it to be a great way to connect and learn from other small firm practitioners who are going through what you're going through. So as I said, right now everyone's line is muted. We will open them up after the introductions, and you'll be able to unmute yourself if you have a question or a comment. Please do try to be considerate of the fact that this is kind of a conference call and we want to try to avoid too many people talking over one another, but we do want to encourage you to participate and make it as conversational and engaging as possible. So I want to thank our roundtable hosts and speakers today. We have three very involved small firm practitioners who are here to kind of moderate and lead the discussion. Christine Peters, who is tax manager at Ppp and Company. Am I pronouncing that right, Christine? Okay, good. I wanted to make sure I didn't. Oh, thanks. We didn't rehearse that one, so.
No, it's okay. Most people, get it.
Good. Christine has been there about 10 years. And she is also a member of the Small Firm Practitioners Task Force. So really happy to have her on today. Also, we have joining us Matt Kidd, who is a partner at Blendon & Kidd Accounting and Consulting, PC. He's been there nearly 3 years. Prior to that, he was with a few other small firms. He is the chair of the Emerging Leaders Task Force. He is part of the MICPA PAC committee, and also part of the MICPA President's Advisory Council. And then rounding it out, we have Jamie LaPiccolo, managing member at Capricorn Professional Advisors. Jamie is an MICPA board member as well. And like I said, all three of our panelists today are part of the Small Firm Practitioners Task Force. So I'm going to open it up to our speakers now and let them kind of share some information about how they've been handling the present situation at their firms, and then we'll open it up to discussion and questions from the group.
Go ahead, Matt. We'll go in the order that she introduced us. How about that?
Okay, sure. So I think the biggest thing that we're working on is just keeping up with all of the changing rules and everything, all of the guidance that's coming out, corresponding with the fellow practitioners, a lot of activity recently in MICPA Connect. We've been paying attention to everything going on and just trying to help our clients as best as possible and to help them understand that we don't have all the answers right now, but that we are all learning and all doing our best.
Yeah, I would say we're in a similar boat with all of this PPP stuff in the past week. We have tried to put most of the burden of answering the questions and compiling information on just two of us, so that our work has completely ground to a standstill for everything else outside of the PPP. But we still have some other staff that are working on tax returns and kind of moving the other workflow at a slower pace.
Yeah, I think we're all in the same boat. I want to take a start from the beginning, from the start of the stay-at-home order. I packed up about 4 boxes full of returns and started working from our home so that the and our office has been always designed to be a mobile office. So, that was a really a quick transition. But and then we got this CARE Act that came through, and really it started for me all of a sudden when I realized that they extended the federal deadline, that okay, we need to make a pivot for our firm to how we're working with our clients, and really pivot into becoming the advisors that they want us to be. So that way we can sit there and try to navigate how do they survive, because this is now becomes less about taxes and compliance and more about survivability for our clients. And obviously there's some self-preservation there for us, right? We need to make sure our clients survive so we have some sort of steady revenue. And so it's been all hands on deck, as this sense of, for me anyways, just trying to make sure that I'm learning and absorbing as much as possible, and really trying to figure out ways to communicate all of the information with our client. I've held now 2 Zoom roundtables with my clients, and the last one had about 60 people on it, including members of the Chamber of Commerce and stuff, and just did a full presentation on what resources are available, and allowed, very similar to what we're doing here, but with our clients. And so really trying to figure out, I think my biggest challenge is to find out what the technology that's out there, and how to best utilize it in this environment now. Our practices are going to change, I think, going forward, and how we communicate, how we, I think, Matt, you made the comment, and I think even Christine did too, at the small practitioners, is that, now this is great because more of our clients, we're forcing them into the e-signatures, we're forcing them into electronic delivery of tax returns and getting rid of the paper, because we're not going to be delivering them in front of them. So how do we still stay in front of them and to provide the service that as small practitioners we're used to doing? So it's been evolving, and it's been a great, I firmly believe this is an opportunity, and I've looked at it as an opportunity. I don't look at it as a negative, and it's an opportunity for us to learn, to grow, and to enhance our clients' experience at the end of the day.
That's a really good point, Jamie, particularly about the technology. And I guess I would open this up to the panel and also anybody on the call. Have you discovered any new technology that's been making your job easier in this environment? I think that Zoom is a great example of things that we've kind of been maybe forced into a little bit more than what we were using it before. But is there other technology that's helping you do your job and communicate with your clients, or just make your day easier?
Yeah, so we have, our firm's always had an Office 365 subscription for, I don't know what, a couple of years now. We had recently started using Teams internally, and kind of chatting back and forth all in the office. We've been using Skype in the past, but now we said, hey, we have this weekly meeting every Thursday morning. Let's do it in Teams so that we can still have some semblance of normalcy. It's been a huge adjustment not being in the office physically collaborating together, but if we can all join in and attempt to recreate that remotely, we've been trying that in whatever way possible. We haven't used Zoom yet, but not internally, but obviously a lot of Zoom meetings. I've got a couple clients that have said, hey, can we have a Zoom meeting? We want to talk to you about this and that. So exploring that as well.
Yeah. I think I've been on more Zoom meetings in the past week than I was on in the previous year or two. It's actually been great because in a lot of cases, I've met clients who have never come in to see us in the last 3 years, and I'm seeing their faces for the first time. And then I'd say the other thing that I'm really thankful we ended up switching to was the Onvio portals this past off season. Because what we're ending up with now, all the tax returns that we've been doing since the stay-at-home order was in place have been getting sent electronically. And with Onvio, it's fairly easy for the client to access it. Some are still going to have issues like any solution, but it's leaps and bounds ahead of what the old NetClient CS was with Thomson.
Really?
Mm-hmm.
So yeah, I mean, the same thing, Matt. I've been using Onvio for about 3 years now, or this is, I think, the third tax season that we've been using the documents of Onvio, and it just makes it. We already have a process that they all get scanned in immediately. So even though I still have paper files, but that's just to kind of push the documents through the office, more or less, just placeholders than source document work. But it just makes it great to have it all put in there automatically. But then, the client accesses right after that, and being able to share, and the e-signature makes it very simple to do as well. And then, as far as Zoom is probably Zoom or something like that, because I've used Zoom and Google Hangout Meet, which is the Google platform to Skype and so forth. But I prefer Zoom. It just has a little bit more functionality. I've held, I think now, 4 client tax meetings where I've just shared my screen and gone through and showed them their tax return right then and there. And I find that it's more productive that way than it is to actually do it in person, because then I can go line by line. They can see exactly what I'm talking about. And then if I need to bring in other documents, it's just a matter of pulling it up from wherever my computer's at and putting it onto the shared screen. And from a staff perspective, as you're alluding to, Christine, is I try to have video calls with my team just about every day, and I require my team to at least provide an email relative to, at the end of the day, telling me what they've done. Just to give me an update of where they're at or what they've accomplished. And it's not so much for me to keep tabs on them. It's more or less just for me to know, because you lose that visibility of walking in the office and seeing where something's at. So it's my way of still seeing some visibility of what's been accomplished, and knowing that, okay, we've received these 8879s, or, these returns have been sent to the clients or whatever. So I just know where things are at, and so forth. And then I'm finding the use of, and Matt, I don't know if you bought this or not, but but you may have projects, or practice, but the Onvio practice, it's starting to become where we're starting to see the reality of that too. So to track where projects are at, in the office, at what status they're at, and so forth.
Yep. Yeah, we're doing the project tracking through practice.
Yep.
We didn't switch it over to Onvio yet. But then, how are you handling if you're doing front end scanning? How are you handling that with nobody in the office?
I don't. I mean, so the interesting thing is we have tried to force most of our clients to upload their stuff directly to the portal. And so we've gotten a much better response this year than I did in previous years. But as people are still being mailed in, we're one staff person, I think, my team is alternating days, if you will, to go to the office and collect mail, and maybe spend an hour there just scanning the stuff in when it comes in right at the office and getting out. So I'm not forcing anybody to do it. They're kind of doing it. Most of my office team has got small kids, and so they're looking for any reason to get the hell out of the house, to be honest with you. So going to the office is a blessing. So they're like, yeah, I'll do it. If it means I get away from these guys, yeah, I'm going. So it's not really hard to convince them to want to go into the office and scan it.
We have a question on the chat from Patsy. Any guidance if clients have laid off employees in March, then in April they qualify for mandated paid sick leave or extended FLMA? Is the business still mandated to pay? Any thoughts on that?
Christine, I'm going to let you handle that, because you're the one that brought up the point last time at the small practitioners.
Yeah, so fun part about that is that the Department of Labor issued some FAQs on, I think, about a week ago. I took a webinar yesterday that said that on Wednesday they issued new guidance, and by the time I checked the link had been taken down. The original guidance had said that if we are subject to stay-at-home orders, that didn't count for sick leave, and my understanding is that the Department of Labor has reversed their position on that. But in terms of if they've been laid off already, then they are not a current employee. Even if it's a temporary layoff, they're not a current employee, and therefore they're not, you don't have to give them the emergency sick leave or the emergency FMLA leave. and that's the understanding at this time.
So now they're saying that the stay-at-home order is going to qualify for reason, what is it? Reason number one, the subject to federal, state, local quarantine or isolation.
That's what I was told yesterday, and that was a CCH webinar that was put on by Paychex. But as I said, when I checked the link, it had already been taken down.
Okay, because I know that I've heard conflicting reports saying that it didn't because it was stay-at-home is different than a quarantine or an isolation order.
Correct.
Okay.
We just gave everybody the opportunity to unmute yourselves if you have a question. Down, if you kind of hover over your mouse over your screen, down in the lower left-hand corner, you'll see where it says mute or unmute, and then your video there. You can unmute yourselves if you have a question instead of typing it into the chat, or if you want to weigh in on the conversation as well. If you've got, if you guys have technology that you've discovered that is making your life easier or making your work with your clients better, feel free to jump in. There was another question on chat. Let me scroll up.
I think it was about 1099s, Jody.
I think it was, yeah.
Yeah.
Am I correct that you do not include 1099 payments in calculating payroll for the PPP?
Yes. That's under the new, that's actually in the new guidance that they issued, or the temporary regulations that specifically say that independent contractors are not part of compensation. You could, and I think the theory on that is because those independent contractors and 1099s can file for their own PPP loan application, so they don't want to be double dipping the resources or the loan availability.
And that is new, correct? Because I believe that as of yesterday, we were hearing that
it's new as a sense of the Treasury's guidance that came up, and I think that it was good. I was doing my research about 1 or 2 in the morning, and that's when it came up, and so that I saw that. So, yeah, it's fairly new relative to probably the last day or so.
Yeah,
But
that was shown. I'm sorry, Jamie. That was in the interim final document that came out last night. Yep.
Right, and I can, if you guys want, I'll share into chat. There is a, and I'll share that for everybody. That way you guys can take a look at that. But there's a website that the Treasury has that basically has all of the latest application, the lender, the Paycheck Protection Program, interim final rules, and borrow more information. And I'm going to recommend that this is the rules that Treasury setting. So I think before we were all going out to blog sites and attorneys and other CPA firms and what they were saying. I think that for this is pretty much covers a lot of the information and answers a lot of the questions that we've had. And I think this is where you guys are going to have to, this is the trusted source that we should be looking at versus kind of relying on, what we've heard in the past. And because there's so much misinformation out there relative to even like the dates of the look back period of the payroll, because it pretty much says in the instructions that the payroll is 2019, not 12 months from the date of February 15th or anything like that. So there's a lot of things that are I think misinformation or hodgepodge information that people are trying to put together and reading too much into it probably.
So I mean, when I read the guidance last night, and granted it was 11, 12 o'clock, is same as you, I thought it seemed like it was a rolling 12 months.
No, because if you look at the instructions, Matt, it says that most of you will. So if you look at the actual application form, the final borrower application, and you look down into the instructions, and Jody, I don't know if I can. Am I allowed to share screen? Okay.
Yep, you can share your screen.
All right, so let me do that real quick, and that way we can show the group. Yeah, here it is. Okay, so this is the application, the final application, and then it comes down into right here. For the purposes of calculating average payroll, most applicants will use the average monthly payroll for 2019. And then it gets into excluding over $100,000. And then it says for seasonal that you can use payroll between 2015 and February 15th through June 30th. And then if you're a new business, you can use January to February 2020. So that's in the actual instructions of the form. So, and I haven't seen that date. I haven't seen dates in the final regulations either, though. So there's been no dates referenced in that I could tell in the regulations from what I read. So I'm going to go based on what the instructions are saying that we should be using.
Okay. And I just got from a Huntington banker after they did their training this morning. They say that they are accepting both calendar year payroll and a rolling 12 months.
And you know, and that brings a great point up, Matt, because the bankers at the end of the day, they're the ones that have got to sign off on the documentation and the loan request and doing their due diligence. So maybe they're going to allow for, because I had somebody tell me on the Zoom meeting that I did today that they had low payroll at the beginning of 19 and they all of a sudden increased their payroll in like October, November because they added on or expanded. And so they're like, well, it's not going to be true representation of what we're going to be in 2020. So they're like, well, what can we use? And so, I mean, that's where I think at the end of the day, I think this is where, our role is making sure we have those relationships with those bankers or getting to know those bankers and really helping our clients walk through that process so that way we can get them the most money possible. So,
well, Jamie, that brings up a good point though. Like, at the end of the day, the loan, those numbers, whether using 19 or let's say April 1st to March 31st, whatever that period is, the 12-month period, it's just used to calculate what the loan amount is.
Right.
It doesn't affect how you use the proceeds in the future.
Nope.
And so they're probably not using, and the bankers are just basically taking our word for it at this point, right? They're not going to be doing due diligence to secure the loans. They're just collecting the data. So down the road, the most important point is going to be providing data that is used in the 8 weeks following. So once the loan is in place, I think that the calculations, my understanding is that the calculations used to determine what the loan amount won't really be that relevant.
Yeah.
George, they did say the banks are going to need documentation. The application basically indicates, where'd that go? I acknowledge that the lender will confirm the eligible loan amount using required documents submitted.
Okay.
Nobody knows what those documents are yet, though, is the problem. And then in the interim final rule, it does point out that at least 75% of the PPP loan proceeds shall be used for payroll costs.
Right.
So the maximum that you're going to have forgiven is 75%.
Which is the 2 times out of the 2.5.
Yeah, I'm sorry, it's not the maximum that will be forgiven, but they are saying that at least 75% of the funds will be used for payroll costs.
And I think that, go ahead, Matt.
Sorry, I was going to say, what Huntington gave me this morning, because they're accepting the applications this afternoon, they sent me what we're supposed to submit. And they say that it will be detailed payroll documentation that will allow Huntington to calculate average payroll costs over the last 12 months prior to the date of application. This may include payroll processing records, payroll tax filings, Form 1099 miss, profit and loss statements, or other documentation to support qualifying payroll amount. And according to that banker, they only need one of those.
We have a question on chat too that kind of pertains to this, and it's, is there a provision to account for new hires as recently as last week? Has anyone seen anything on that?
Not in the borrowing. I don't think that because they're pretty clear on when the calculation of the borrowing is. Where that'll come, I believe, into the analysis is going to be in your overall payroll cost as a comparison to prior payroll costs. For the amount of forgiveness, but I don't think it's going to allow you to do it for the borrowing because, again, I think that they've been pretty clear on the final cutoff date or the look back period of calculating average payroll. So I don't think so.
I have an interesting follow-up to the point that was brought up about the 1099s. So I've got a client who has a third of his workforce are independent contractors, and they're full-time. And yeah, they're continuing to work regardless of whether or not this goes on because they're still doing work from home. And, you know, he's toying with the idea of converting them to W-2 and then maybe reconverting them back to 1099 down the road just so he could get it. I mean, has anybody heard this before? Like, this is, you know,
It
because
sounds pretty risky from the CPA's point of view to me. Making, you know, obviously we all know that the employee versus independent contractor is a big issue for the IRS and the Department of Labor. And I think if you were to switch them and then switch them back for the convenience of this, I think that would be really risky.
yeah, I agree. And that was kind of the advice that I had given them. It just, I hadn't even thought about it. You know, the client had brought it up and I was like, you know, it's just, you know, stretching things a little bit.
This is Jim Reinert. I believe that if you make the switch from contractor to employee, the IRS will probably not say a thing because they're happy to have employees. The moment you switch them back after you've depleted the funds from this, you are just begging for an audit, and one that you will probably have a very high probability of losing.
Yeah, because I think it also rises to the level of should they have been employees in the first place.
Right. And I was going to say, my understanding is that if you're using these funds for non-qualified purposes, you could be subject to criminal charges. So it's another thing our clients probably don't want to risk.
This morning I got a letter from an email from one of the local bankers that I work with, and he gave me the list of documentation they require, and it's a very extensive list just to do this application. They want to have articles of incorporation, bylaws and operating agreements, verification of ownership. They want a copy of the driver's license for all the 20% owners. They want the 941s, the 940, the 1099s for independent contractors, so I don't know why they need that. Monthly payroll reports, a very, very extensive list. They want financial statements for several different periods and your most recent mortgage statements and the copies of your utility bills and an extensive list of documentation. So I think it depends on the bank as to what they're going to require.
What bank is that, Pat?
It's Horizon Bank.
Okay, make sure none of our clients go through that then. Holy Jesus.
I looked at the list and went, whoa.
I mean, I think the problem is here, in my opinion, is the federal government has basically said, we're going to do this. We're going to give everybody free money. And, oh, by the way, banks, you need to police it. And so depending on the bank's risk tolerance of where, because I don't think it's defined, and I think the banks are trying to get clarification on that. They don't know where their liability lies with this on relative to providing a bad loan or a false loan or there's no personal guarantee. This is all backed by the SBA. So if all of a sudden somebody gets the loan, goes belly up, is the SBA going to try to come back? They can't come back after the borrower because it's no personal guarantee. So are they coming back after the bank? Who are they coming back after? And are they going to come after the bank and do an investigation that they did their improper due diligence? So I think that the smaller the bank, the less risk they're going to want to take, and they're going to want to make sure their I's are dotted and their T's are crossed more, as opposed to the Chases, the Huntingtons, and things of that nature. I mean, Huntington is asking more than PNC is, because PNC for right now for the loan qualification, their initial list is just nothing but payroll records and the going down the list, support health costs, support retirement plans, support your payroll, and that's it. They're not asking for financial statements. I know Huntington, I saw a list, Matt, that was asking for monthly financial statements for 2019 and 2020. So I think that it's going to be, and that's going to be the unfortunate thing is we're not going to have any uniformity as a sense of what do we help our clients gather.
Mark Miller has his hand raised. I want to make sure I'm going to unmute him and see if he has a question or if he's just saying hi. Oh, Mark, I'm not.
Yeah, can you hear me?
Yes.
Okay. I'm up north of you about 200 miles, so my question's a little bit different. Yesterday, Nick sent out an email about volunteers for the Ppp Paycheck Protection Program assistance. Has any more information come out on that? And to give you some background, my county's 27,000 residents are large employers. All their accounting's done downstate, and all the other small businesses, it's generally a family member on QuickBooks at night or on the weekends. So they do not have the same level of sophistication of your larger clients. And thank you.
Rachel may have some more information on that. I know she's on the call. Rachel, can you jump in and talk a little bit about that request for volunteers for the PPP program? Or maybe Rachel's still.
Yeah, sorry. I have a couple of tabs going on right now. We are collecting volunteers for the PPP program, and we're currently setting up a Connect page. And as we get questions from the public and from small business owners, what we're going to do is we'll post them in that Connect page, and then I will pass those answers along. So if you would like to volunteer, you can send an email to me directly or to the CARES resources at mppa.org, and we will get you added to that so that we can have you help these small businesses in Michigan. The goal of this group is to get as much of that federal funding as we can here in Michigan, because with the number of small businesses in the country and the amount of funding, not everyone who applies will receive some of that money. So we want to make sure that our small businesses here in Michigan who may not have a CPA that they rely on or a relationship with a financial institution are well positioned for those applications.
Okay. Thank you, Rachel. We're a small community. The Air Force left 25 years ago, and they've been relaxed in terms of economic development. So any assistance you can give us up northers, either with press releases for the newspaper or on the TV, would be appreciated. And thank you.
That's great. Thanks, Mark. We have another question that's coming in from George. Does anyone know how FTEs will be defined and calculated for purposes of the PPP when determining the loan forgiveness reduction? Thoughts on that?
I've read that it'll be the 30-hour rule that was part of the ACA. I believe the interim final rule has some information about how the forgiveness will occur. Let me just flip through here. I know I highlighted it. I think that's one of the big questions really in my eyes, is that I haven't seen anything to really say how we calculate this or what date we measure by.
I also think that, another good question is because I've had this brought up several different times, and I'd love to see if anybody's got an answer to that. When can we control funding? Can we control when we receive the funds? Because, I've got, for those that have doctor clients or dentist clients, the American Dentists Association kind of gave a roadmap to their clients saying, do this, and do this. And one of it was lay off all your employees, apply for the PPP loan, wait to get that until you're ready to go live again or get back into the office, collect on the PPP, and then you've got 8 weeks of payroll to pay for. Now the problem's coming in is some of them are realizing they may get the funding before people are actually able to go back to work. And so now the question is can we control that timing? Now I've told my clients is just take it and be happy. It's a 1% loan, for crying out loud. It's not the end of the world. And if it's not forgiven, it's not forgiven. It's still a 1% loan. to help you pay for payroll and get through this. So, basically quit your whining about it. But I can't say that publicly to them, but that's kind of what I'm thinking. So, but I didn't know if anybody's heard anything relative to, if we get to kind of pick our closing date relative to this.
No, I mean, I would think if you did get to pick that, you'd have problems because most people would be pushing it off until things open back up.
Well, but I think there's some people that are, they're still trying to pay their employees, do the right thing, and they're trying to get themselves paid. How many of our small business owners are collecting their own payroll, and so to help pay for that or whatever. But yeah, I mean, there's probably I'm expecting that based on the spirit of the law is to prevent people from going on unemployment. So I think that from that perspective, if you look at the spirit of the law, they're going to give you the money as soon as possible, and you're not going to have a choice. So, and it's going to come via e-signature. So I guess the only thing you could do is just kind of hide from your banker for a couple days to avoid the e-signature side, right? But that's probably about it.
Well, I think the other is that if you wait too long, the funds might be gone.
Yeah, well, that's what I told them. I said, again, it's coming back to it's a 1% loan, right? Just take your money, be happy about it, or you potentially risk not getting anything. And so, what would you rather do? Hell, I'll take the money and just that's fine if it's not all forgiven. It's a 2-year 1% loan. So most of these doctors, when they get back running full speed, they're going to be able to pay it after a month of operations anyways. Let's be honest about that. So
another question on the chat, what's included in payroll cost? Is the employer match of FICA and Medicare included? I read that you have to subtract out payroll taxes.
Yes, that's my understanding as well. Michigan unemployment taxes should be allowed because it's state taxes based on compensation. So I believe that the Michigan unemployment is allowed, but the FUTA and FICA is not. And there's a interesting thing though. Christine, did you see that subtraction that they were talking about in the relative to the forgiveness portion, that you're supposed to subtract out any FICA and Social Security and things of that nature for that?
Yeah, they were very specific in the forgiveness that
right.
FICA from February 15th of 2020 to June 30th of 2020 is not included in payroll costs. But I think that's kind of redundant because it's already not in the definition of payroll costs.
Well, what bothers me with that is it says that it includes employee FICA and includes federal withholding. And so that's all of a sudden going to reduce the amount so I'm kind of curious on what that's all about, because I think that if you look at and I think this is, for those that don't know, it's in the regulations in there, and they say something relative to, and I can't find it right now, but it's in the forgiveness portion in the regulations that say that you have to, the subtraction. And I think Michelle Gallagher,
the borrower information sheet.
Is that where it's at?
I think.
I'll have to look for it. We can go on, and maybe if I find it, we can share it and see. But that was something, and I think that Michelle Gallagher and Leanne, I was on an email between Michelle Gallagher and Leanne about that. And the 1231 payrolls per the application, the issue of whether partners be included. Okay, they do not believe the FICA taxes need to be deducted from the base at the time of application, but do mention it could be an issue at the time of forgiveness, is what they're indicating. And so I'll have to look for it.
Yeah, I stand correct. It's not in the borrower's packet. I think it's in the interim final rule.
Yeah.
We want to remind people too if you're not part of MICPA Connect, now is a great time to join MICPA Connect. As people discover new information, or have questions. There's a lot of conversation happening and a lot of information being shared via Connect. It's a really good resource. We have a couple more questions here on chat from Mark. What about overall strategy for clients? Take EIDL and grant first, PPP second, and then unemployment, depending on impact of the business?
That's an awesome question, Mark. I believe, however, that the new rules just came down regarding the use of the EIDL. That's it's basically starting to, this is an email from a banker that I got that says, starting today, the issuance of the final rule, borrowers cannot apply for both the EIDL and the PPP loan. Note, if a borrower received the EIDL loan between January 31st and April 3rd, it does not impact the ability to apply for the PPP loan. But if they received the loan between those dates, was used for cost or PPP loan must be used to refinance the EIDL loan. So they're forcing people to basically use the PPP to refinance your EIDL, and that is in the final regs I saw. So the strategy of applying for both is really kind of gone as of today. And then if you receive the EIDL, which I don't think anybody would have in Michigan anyways, prior to January 31st, you're not eligible for the PPP. So I think that the strategy that we're kind of talking with our clients is have them apply for unemployment, because that doesn't impact the forgiveness as long as they're back from temporary leave by June 30th, and then still apply for the PPP, and then you decide if you want to bring them back or not. I don't know, Matt, Christine, do you guys have anything different?
I know that you can use the EIDL, like you said, you can use the PPP to refinance the EIDL. In my take on it, though, also is that no one has received the EIDL for COVID-19 related items. We even had I think a chiropractor who applied for an EIDL about 2 weeks ago, before the CARES Act even was in place. He hasn't heard anything back as of a couple of days ago.
And has he received this has he received the $10,000 advance either?
No.
Okay.
And this was a couple of days ago. I was talking with my colleague, but at the time he applied, the grant wasn't even in place because the CARES Act hadn't even, I don't even think it was proposed at the time. He did it right away. I don't work with him directly, so this is just repeating what my colleague said, but he hasn't heard anything back at all in 2 weeks.
Yeah, the rule doesn't seem to address anything of receiving the EIDL after the fact, after today, which is interesting.
Yeah, because we had a client that applied last Friday for the EIDL, and they haven't gotten anything.
Yeah, I've got clients as well. No, they haven't heard anything, and no money's come in. And that was the one that was supposed to be the $10,000 3-day. You'd receive it in 3 days.
3 days from approval.
3 days from approval. Thank you for clarifying.
So who knows how long it'll take to approve even the emergency grant.
Yep.
Michael is wondering, where can we go to get information getting credits on Form 941? Who's eligible?
I would love to know that. I don't know if they've issued anything yet on that. I haven't seen any guidance on any of the credits yet.
I've seen a little bit on the FFCRA. In terms of where to go for it, I think probably either just the IRS coronavirus page or maybe Treasury's coronavirus page. But my understanding with the FFCRA is that you simply reduce your next federal tax deposit for the amount of any sick pay or FMLA pay that you have paid out. And if you exceed your federal tax deposit, there's a form that's in a draft format right now, the 7200, which is supposed to be some sort of a quick refund request. In terms of the 50% credit for payroll taxes, or I think it's a 50% payroll credit, and then there's the tax deferral. I haven't really seen much of anything about that yet.
George is wondering, in calculating insurance costs for PPP, can we use gross costs or should it be calculated net of employee share?
We've done net. We've
That's
done just the portion
expenses.
that the employer's covering.
And then Gary is asking, what about multiple businesses with one owner? Any considerations for inconsistent issues making 2019 inconsistent?
Gary, can you clarify that?
Gary, you should be able to unmute yourself. Lower left-hand corner of the screen, when you kind of hover over there, you'll see where it says mute or unmute. If you click that, then you can ask your question directly. Or if I can find you, I can unmute you. Hold on just a second. There you are.
Gary Lehman, right? Yeah.
Yep. All right, Gary is unmuted, but we're not hearing him.
Gary just likes to throw a bomb out there and walk away. Just throw the grenade and walk away and see us struggle with that one.
I mean, have you guys seen anything on the affiliated business rules?
The only thing I've seen is that the application asks if any owner also owns other companies, then you're supposed to disclose that on the application as an addendum. But I haven't seen anything in terms of affiliated businesses and not being able to get loans in that case. I haven't seen much of anything, no.
So have you been advising the clients to apply separately for each of their entities for the PPP?
The clients that I deal with directly, I don't have any that are affiliated. We do have several that own multiple businesses, in some cases 100%. And I have not been asked that question yet, so I have not actually contemplated the answer.
So that's, I mean, we've been telling people to apply for each entity because I don't think we have clear guidance one way or the other. So my thought was cases, get it in.
It's based on the payroll for each company.
Mm-hmm.
So to that matter, you know, if you've got company A, company B, they've each got their own payroll, then they should each be able to apply for their own separate loan.
That's kind of the way I take it too. And I didn't see anything in the final regulations on that either about, you know, related entities or common management or anything. So I was kind of surprised by that, that question. So.
And then kind of the other, for overall strategy, I'll pose the question for your rental real estate clients. Have you been directing them to the EIDL if they have no payroll in the entities?
That's probably the most obvious place for them to go. The drawback is are they going to be able to get it because of the collateral requirement? You know, if they've already got some sort of a mortgage on it, are they going to be able to collateralize that with the SBA? I know that but I don't know. I mean, it's an interesting question to do that or not, but I don't know if they would get qualified. I mean, at least they could try to get the 10 grand, I guess, would be the the thought there. I have with that, in that same realm, what about, okay, so rents are part of the recalculation or the forgiveness and the use. What about rents to self-rentals? So you've got a doctor that owns her building and they pay rent, but that building's got an underlying mortgage in the rental organization or the rental company. Are you eliminating that and just going after the interest on the underlying building mortgage, or are you just saying the rent? I mean, granted, keep in mind that we can only go up to 25%, so it may not be a big deal, but it's still an interesting question of what do you do there?
That's a great question. I mean, I think the operating company is probably the best place to take the PPP, obviously, because
right.
They have the payroll, they have the rent. In a lot of cases, I don't think that the mortgage interest is going to come close to the rent payment.
Right.
But again, I think that's something where we really just lack information.
Right. And it's going to be at the bank's mercy, right? Because the banks are the one that have been charged to go ahead and make sure that everything's compliant. So one bank may say one thing and another bank may say another.
Jamie, did you say you were of the feeling that individuals with rental properties would not be eligible?
For what, the idle? Or no, I said that you may run into an issue because under the idle loan, there's a requirement of collateral. So if the rental property is already mortgaged, what position is the SBA going to be comfortable taking a second position behind the primary mortgage?
Gotcha.
So there may not be enough collateral in the rental company to get to qualify for the idle, but still, part of it is apply, because the government has basically said, go ahead and apply, because of the fact that if you don't apply, we're still going to maybe give you this 10 grand and it's going to be forgiven. So why not?
Do we have other questions from the group? We're going to open this up, and if you do have a question, feel free to unmute. If you're having trouble and we're not hearing you for some reason, you can always type that into the chat bar, and I'm happy to relay the questions.
So I actually read some interesting stuff. This is Jonathan Satterfield in the final regs, kind of pages 21 through 23 or 24. It gives a brief, it's the final regs on what the lender actually has to underwrite, and it is not a lot. And on the forgiveness, they can actually rely on attestations and certifications in the forgiveness if documentation was provided in the beginning, which is absolute insanity. One thing that I know has been kind of discussed in certain circles is, how do we actually get paid out of this instead of billing our clients an hourly rate or baking it into something else? And if you go to pages 24 and 25, the regs say the lenders will be paid and agent fees will be paid by the lender out of fees. So I don't know if the lenders have a choice on paying agents in this circumstance as written by Treasury.
Sorry, the AICPA actually clarified that today, or yesterday. I just sent that link to the chat. It says, in terms of preparing, if a CPA firm is charging fees for advising the small business and deciding which loan program and tax relief program is best for their business, we think it is reasonable that those fees would fall outside of this provision of the CARES Act. Thus, a firm can perform services outside of loan preparation assistance, and those fees would be paid by the client.
Yeah,
So,
and
got that this morning.
And PNC Bank has sent me a thing saying, according to their standards and guidance of SBA, they will not be paying any agent's fees. So while they may have to or will pay, it's a matter of how are you going to try to get collection on it. So,
and Huntington's story is that they are requiring the client to apply directly.
Yep.
So that we can't act as the agent.
So the question is us gathering all the data to give to the client, is that in the act of the application, or is that in some other form that we can get compensated for? I think is an interesting question. I also look at this too as do we have, as much as I think we all want to get paid, how much of this is coming down to a little bit of a moral obligation to help our clients? Because I mean, at the end of the day, if our clients don't survive, we don't have paychecks. We have to rely on them to pay our bills and you know what? I've been working with the doctor, and he's been so grateful that it's gonna. I have a feeling that our efforts to helping them through these tough times are going to be paid back in spades at some point in time. And if we're able to get we're fortunate because during tax season, we've still got revenue coming in. Hopefully we're going to get paid on the tax returns we prepare, but you know, good chance that we will still get paid on that. But yet we still can, you know, I'm still planning on applying my firm for the PPP because I don't know what the future outreach is going to, or outcome is going to be. So, you know what, I can maybe afford to do some free goodwill for my clients. So I think that there's a little bit of a, you know, you have to kind of look at, you know, can you look in yourself in the mirror and say, I'm going to charge you $500 for this application when, you know, when you've laid everybody off and you have no revenue coming in.
We have another question on chat from Michael. Oh, sorry, Jim, go ahead.
Just received an email.
No.
They still are updating their website and they expect it to be open shortly.
Who's that, Jim?
It was Chase Bank.
Oh, okay.
Okay, so the question from chat is, if your client is behind in filing taxes, business and personal, will they be eligible for EIDL or PPP?
I haven't seen anything that says otherwise. The only thing that I've seen would preclude them from getting the PPP would be if they've ever defaulted on an SBA loan in the past. If they are ineligible from participating or presently involved in a bankruptcy. Those are questions number 1 and 2. It says if those are answered yes, the loan will not be approved. So I haven't seen anything regarding tax obligations being compliant.
And again, technically, they're not asking you to submit financials or any type of tax prep. So it's not required. The banks may require it, but it's not required as part of the loan, I guess. So I don't think it would stop anybody, in my opinion.
Gary Lehman, I think we were picking up your audio now if you want to ask your question.
What I did was an alternate auditing procedure and did it through the phone, gave up on the computer. But, so what I mentioned before in the chat was inconsistencies. Being small businesses, you have a lot of individually owned entities. And with a lot of individually owned entities, there's different circumstances that pop up in different years. So if you take a look at everything I've seen, the years being considered are sort of limited. But what happens when the years that are limited happens to be a year that one of these individual business owners had unusual problems? Are they going to get screwed because their measuring stick doesn't give them their normal, if you're doing a business valuation, let's say in my area, and you're going to normalize things, there appears to be no consideration for any normalization issues for special situations.
Oh, I agree with you, Gary. I don't think there is. So can the clients get potentially screwed? Yeah, but I think that maybe that's a conversation with the bank, though.
Okay, thanks.
That's my opinion. I don't know what you guys.
No, I mean, I think you could try the seasonal employer calculation if that worked out better. I don't think there's anything precluding anybody from saying that they're a seasonal employer.
Okay, thank you.
Any additional questions from the group? Let me see. We have anything over on chat? Mark looking for some clarification, particularly from Jamie. The Small Business Owner's Guide to the CARES Act, which discusses SBA loans, says on page 8, the clients can get both EIDL and PPP. Your response to my strategy question said no. Did you mean no to use on the same expenses?
No, I mean, I'm reading this based on guidance that I got emailed this morning from 2 different sources relative to the EIDL loan. So it could be that the guide that you're looking at is a little bit out of date. But what they're saying is that you're not going to be able to have both of them at the same time, and then you're not going to be able to apply for both of them at the same time. If you apply for one, you can't apply for the other. That's how I read the email that I got. So It could be just, again, and we all have to take all of this information with a grain of salt, because what we say today or what we know today is not going to be what we know tomorrow, because it's going to be totally different.
Right, and speaking to that small business, the Small Business Owner's Guide to the CARES Act, there was an error in that in calculating the payroll base period. So I don't know. I know this was an official. I don't even know where it came from. I think it might have been some sort of a Senate committee publication, but it's not accurate in at least one other section. So I've kind of disregarded it in general now that we know more.
Another question. What happens if we already applied for the EIDL and we would rather have the PPP loan? What do we do if we can't have them both?
The provisions of the final regulations that I saw in the PPP allows you to refinance the EIDL loan if you get it. So, for example, they have a couple examples in there, but assuming that you get something under the EIDL loan, that adds to the amount that you can borrow against or borrow. So it's your payroll cost times 2.5 plus whatever you have on the EIDL loan to refinance it. So it's automatically, I think they're going to require you to refinance your EIDL loan into the PPP. So then which is not a bad deal if you think of it, because you're converting the EIDL from a 3.75% rate to a 2-year 1%. So, I mean, you're going to have a little bit more time or a little less time to pay it off, but you're doing it at a lower interest rate.
And the EIDL loan, you can pull the application anytime before you receive the funds.
Right.
So at the pace they're moving, we're probably going to have the PPP answer before we see anything from the EIDL loans. But kind of on those EIDL loans, then for the owner, for these self-rentals, I mean, the doctor that owns his office, should we have them apply for an EIDL loan on their LLC that holds the building? Would they be eligible for the 10 grand?
It's an interesting question, isn't it? And then maybe that's where the affiliation's coming in to make sure.
I haven't seen anything that says that we can't do it. It doesn't seem to be logical, but I haven't seen anything that says we can't.
I saw something from PNC come across my desk or email that said that they were each application was going to be based on a federal ID number. So maybe it's possible that you can do it. I'm sure there's going to be people out there that are going to try everything and anything and just see what the hell sticks. So, like I said, the American Dental Association recommended all clients as of over the last weekend, and my phone blew up from several different doctors and stuff to go apply for the EIDL loan, get your 10 grand, put everybody on unemployment, and then apply for the PPP. So they were, they had a roadmap out there already. And if you look back now, that roadmap is probably not valid. So I don't know why you couldn't. As I've heard several times by several politicians, we're building the plane as we're flying it.
A follow-up question from Michael. What about the amortization between the two loans? One is 2 years and the other 30 years.
That's an analysis you're going to have to do for your client. What's better for them, from cash flow. And I mean, there's so many different factors in that.
And I think one of the points here is that both the EIDL and the PPP are supposed to be used for businesses impacted by the disaster. And to that, one of the points they make in the interim final rule is that they considered a lot of things in coming up with the 2-year period, in a sense that by all hopes this will be over with and back to normal, whatever normal is anymore, but hopefully that within 2 years the revenues will be replaced and businesses will be operating and will be able to pay that back because they'll have the funds.
And I mean, I don't know, and I'll throw this out to the group. I would kind of fully expect that if this, this problem is going to span more than 2 years, that there's not going to be some sort of, things going on in Congress that are going, we've got these loans coming up due, we're going to have to do something to extend them or do something along those lines. So, I mean, not that I have a lot of faith in our politicians to do the right common sense, but, you know, I think that there's some, that they may have something there that they may do. So, you know, but I still look at the fact, like you said, it's used for payroll costs for a short period of time, and they're giving you 2 years to pay that back if it's not forgiven at 1%. And so, you know, it's not a bad deal overall.
Any other questions from the group?
Has anybody, I have a, now this is going to be a very technical question, and I'm going to throw this out here relative, and I don't know anybody that's got other international experience. So I have a client that is it's a foreign corporation with the ability to do business in the state of Michigan or in the U.S. And so they file a branch tax return, a U.S. branch. There's nothing, the only thing that's in there is precluding them from filing is the fact of the 500 employees. So do you think that 500 employees is just based on the branch in the U.S., or is it based on the entire worldwide?
I think I heard somewhere or read somewhere that it was 500 U.S. employees.
Good. Okay.
And I'll try to find that. I know I read that this morning.
That'd be awesome, because we've gotten past because the other question was the only foreign aspect of this loan is, there's one other thing I want to share with people that I saw funny, but in the loan it says that it has to be for U.S. that are the primary residences in the U.S. employees that are the primary residences in the U.S. And so we had to go through their immigration to determine, because half the clients or half their employees are on H-1B visas. And so I wasn't sure if that established a principal residence in the U.S. or not, and the attorney feels comfortable that it does. So, which I thought was, I mean, that's good for my client, but it was trying to get through the other one. Has anybody seen the application, the verbiage on the application that asserts, I think there's an assertion on there that you will buy or do make every best effort to buy U.S. goods?
Yes, I saw that. I highlighted it.
That struck me as, I'm like, oh, wow, okay. How are they going to enforce that one?
I think it's just a, hey, keep this in mind.
Yeah, I think so too.
Remember where you're from, because there's no way they can do it, because it just says to the best of your ability or whatever the verbiage is.
Yeah.
And there's things you buy that they're just not even made here. So
yeah. To the extent feasible, I will purchase only American-made equipment and products.
Yeah. There you go. To the extent feasible, that's the out.
Okay. So yeah, I found that just hilarious when I saw that. I'm like, oh, that's interesting.
Jody, I don't want to jump the gun on this, but I think, the last 3 days of this has been great. And if there's any way, that MICPA could consider throwing, another session or two out there for next week where it's just an open forum. I mean, I'm using Connect right now, but this is, I think this is much better from my perspective. And if anybody else would be open to that, I think it would be great. Okay. Even if it's just for a half hour, 45 minutes, just to ask questions of each other.
Yeah, absolutely. That's what we're here to do, is to help try to facilitate these kind of discussions and conversation. I know not everybody is on Connect, but again, if you're not, I encourage you to get on Connect. There's great information there, but obviously you are each other's best resources as we navigate this. So any opportunity that we have to bring you together, if there's interest, it certainly isn't a difficult thing for us to be able to put these together so that people can get on and ask questions and share information and ideas. I think it has been helpful. I've heard some good feedback, and I hope everybody feels that these conversations these past couple of days have been helpful. If there is a specific topic that, or even, as we do an open forum, kind of a list of topics that you'd like to discuss, send them my way. It might kind of pique people's interest and whet their appetite to get involved in the conversation, if there's a little bit more clarification on what we're going to be talking about. We have some questions over here. What is MICPA Connect? MICPA Connect is an open forum kind of think of it like a
Little style message boards.
yeah, like a message board where you can join in, ask a question. I compiled some data from it yesterday, and we've had about 7,000 views in the past 2 weeks of Connect. We've had about 300 posts, so I know a lot of people are going there for information. There's been some fantastic discussion, some really good resource sharing when people find great links, kind of like the one that Christine shared earlier. People are posting them to Connect. You can get there through our website. If you go to micpa.org and then click on the drop down to Connect, it'll take you to it, and you can join the open forum that way if you're not a part of it already. If you have any problems in doing so, please reach out to someone at the MICPA. Obviously, our IT team is real well versed in how to help you get logged on, as is the membership team. So if there's any problems with that, but do check it out. It's pretty helpful. I'm going to look over here and see if there's a couple more questions. Jamie, giving us the timing of the PPP and unemployment again. You mentioned bring employees back by 6:30. The nice thing about unemployment is the 29 weeks to carry client employees. Can they do PPP after unemployment?
Keep in mind that the 6:30 deadline is for the forgiveness calculation. So you could, if you want to leave people on unemployment for the full 39 weeks, you can do that. You're just not going to get your PPP forgiven, depending on when you get the funding and the timing of how it works. So again, and we've had this conversation with some clients because of the timing of when they're going to receive the loan versus the time that they're going to be back up and running and trying to bring their employees back. So it's a matter of, are you going to just want to get the loan and not have it forgiven and have a 2-year, and really it's 2.5 years because you get 6 months to defer the first payment, but you, I think it's going to be that way. So you're going to get yourself a 2-year loan for 1%. So you have to make that decision, Mike or Mark, if that's where you want to, go. But there's no requirement that says that the requirement is that you have to spend it on payroll, rent, and so forth. So as long as you think you can make up that payroll, and I don't know, is there a look back period, guys, on how long you have to spend those costs? Is it through June 30th, or is it can it go farther into the year?
8 weeks from the time you get the money.
Right, but that's the forgiven part. But what about the part of, you're supposed to use it for payroll and everything else? Is there a time for? I didn't see a time frame of when you have to spend on, because you have to spend it on payroll and other rents and things of that nature. But and the 8 weeks is the forgiveness. But what if, is there time beyond the 8 weeks that you have to spend this still?
Yeah, I think as long as you're using it for the qualified expenses, the time is not limited. It's just that the first 8 weeks are the amounts that are going to be considered for the forgiveness.
So conceptually, somebody could get the loans, sit on it for whatever, and then when they bring their employees back, they could then start to pay it out. As long as they pay it on those qualified expenses, they're not in violation of the loan, but they just won't qualify for the forgiveness if they're not within the 8 weeks. Is that how you interpret it, Christine?
Yeah.
Okay.
Good. Does anybody have any insight on if employers will be able to participate in UIA work share with the PPP? Because I think you can go up to 75 or 80% employment with that UIA work share. Can we put people at?
That's an interesting question.
Can we put all the employees at 75% work share? They collect unemployment on 25%. We still get the PPP forgiveness.
As long as your payroll didn't drop more than 25%, and you've got the same head count, that might be a good solution. Is work share just a Michigan concept, or is that a?
Most states, I know for sure California has basically the same program as Michigan, because those are the two that I've set up.
Because the only thing
states have it.
The only thing I could think of, Matt, is did the, they may not have considered a work share as an option relative to, because looking at it from a federal law. So, but interesting. I mean, I guess you'd have to run the numbers to make sure you don't see a 25% decrease in payroll costs.
Mark is asking, what are the basics of work share?
So basically you enter in, you submit an application to Michigan Unemployment that you are choosing to reduce all employees in a work unit to a specified percentage of what they were making before. I believe the percentage can be between 55 and either 75 or 80%. And then the deal is unemployment, if you put them at 55%, you're paying 55% of their wages, and then they are receiving 45% of their Michigan unemployment benefit. So it's a program to allow you to keep everybody employed without having to do layoffs and still allowing them to receive a supplemental income from unemployment.
Another question on the chat. What is exactly included in payroll costs for PPP? That seems to be a pretty common, pretty popular question. What is included exactly in payroll costs for PPP?
Well, so straight from the, I just shared the Treasury website where they have all of the, there's 6 attachments, one's for lenders, but what counts as payroll costs? Salary, wages, commissions, or tips capped at $100,000 on an annualized basis for each employee. Employee benefits, including costs for vacation, parental, family, medical, or sick leave, separation, dismissal, group healthcare benefits, including insurance premiums and payment of any retirement benefit, and then state and local taxes assessed on compensation. So that is the definition. What we've been including are the wages, retirement, health, Michigan UIA, and a little bit of a debate, but we've also included workers' compensation insurance premium in our calculation.
Do you guys have from a principal standpoint, I think I know the answer, but do you have an actual answer on the employees that are over 100 grand? Are their benefits subtracted?
That's debatable. The way it's written, it seems that only their salary is limited to 100,000.
So I mean, for you look at, I mean, you have a defined benefit plan. I mean, if an owner is dumping in 120 grand into a defined benefit plan, do we get to count that as payroll costs on top of his 100 salary?
Great question.
Because I mean, it's a huge factor. I mean, you look
Right?
at, I mean, you referenced Jamie's dentists. I mean, a lot of them are in defined benefit plans that are dumping 100 grand a year in.
Very true. Yeah, I think that that's debatable. We kind of questioned it in here. The way it's written, the only thing that's limited to 100 is salary.
Another question, as for EIDL, is a nonprofit 501c8 eligible since there are no employees?
No, because it's calculated based on payroll. I know that I know though that they're going through their 4th round or 4th whatever installment of a new act that they're working on, and what I've heard, because the first one excludes even like Rotary Club and other things, and chambers of commerce, and I think the U.S. Chamber of Commerce is fighting to get them added to the next round of SBA funding, because there's even, I've heard one that there's going to be another SBA funding to help with machinery and equipment, and I think they're going to be added there. But again, if you think of the formula, your borrowing base would be 0, so there's no way to add. So I mean, the only thing that they may be eligible would have to look under the EIDL loan.
And that was the question. It was about the EIDL.
Oh, was it?
Yeah. Yep. For nonprofit 501c8.
I don't know. I don't know which one is it. Which one is 501c8?
Fraternal organizations, like alumni associations and clubs.
Okay.
I'm not sure. Don't quote me on that.
I mean, they have to show that they've got economic disaster, so I would assume that they may be able to.
Yeah, 501c8 is fraternal beneficiary societies, orders, or associations operating under the lodge system.
That's a good question.
So it looks like in the chat, somebody said that yesterday, Leon said that we can't count the profit sharing contributions for the wages that are over 100,000.
The rules, though, I mean, everything in the final, I mean, that may be true at the end of the day, but from the instructions and everything else, they're not saying there's a limit based on. So I think, and I think Leon even said, you know, go with the highest number and let the bankers tell you no. So at least, you know, because you're right, because the doctor clients that we all have, they either doing, you know, they're maxing out the 401k portion or they're maxing out a defined benefit plan. And so, you know, they're doing that based on $250,000 or $280,000 of wages, right? So that'd be interesting to see how that, I mean, and again, I think that to George's point, you know, it would be kind of interesting for all of us to kind of get back together after next week, after we figure out what the banks have said and realize, start to, you know, do a little bit of postmortem of what we thought we knew and what we actually know, right?
That's a good point. And we will arrange something for next week, likely Wednesday or Thursday, to do another one of these calls. And if everybody wants to hop on and share kind of what you've discovered as things have shaken out a bit, I think that would be very helpful.
Yeah, I mean, I think it would make sense. It would be, you know, it would be interesting to see where everybody got it right and where everybody got it wrong, because I think that even the information, you know, the three of us are giving, it could be, again, it could change tomorrow. So.
Mm-hmm.
So we're going to get together and see who managed to build the plane on the fly and who crashed into the mountains.
Yep.
Who landed.
Yep. And you know what? We may find out that I have a feeling that a lot of this is going to vary based on the bank. I think some banks are going to take different interpretations to the rules and so forth, which is interesting because then, you know, I know like PNC and I believe Huntington and to some extent Chase have all said they're only going to be doing this for their deposit clients. And so, you know, does this start to create SBA shopping? Because I also heard that, like, and I think Jonathan had called me earlier today and said that Level 1 Bank is accepting all applications. Mm-hmm. So, you know, do you try to figure out who's got the most relaxed standards and start shopping them around for your client?
Point.
It's an interesting time we live in. I'm telling you that much right now.
Well, I think that one thing has become abundantly clear, and that is how important CPAs are to your clients right now to be, you know, helping wade through this never-ending cycle of changes, and the information that you guys provide, and clearly the work that you're doing to come up with the right answers, even being here today and being a part of this call and asking the questions. And as somebody had mentioned, just to even help kind of reaffirm what you think you know, and collectively, I think that has been exceptionally helpful. Mark asks now, so when are you all going on vacation when this is over?
This isn't over till July 15th.
Yeah, can you tell me when it's over?
Right.
I just got my notification from Detroit News that boating is banned under the stay-in-place order. So
what?
Wow.
Everybody stay inside because I got to get out on that boat come Memorial Day.
Yeah. Yep.
All right. Well, I want to thank our panelists today, Matt, Jamie, Christine, for being here, for answering the questions as they've been flying in. We really appreciate you guys kind of moderating this discussion. Again, look for another one next week. Let me get with the team and find out what day is going to work best from our end. So do watch for that. We'll make sure we post it in Connect, and it'll also be part of eNews. And we'll do kind of an open forum and have some more moderators like this group helping lead the questions. Thanks, everyone. We really appreciate it. Make sure that you are staying on top of the latest information, again, via Connect and also our COVID-19 resource page on the MICPA website. If you have any specific questions or challenges, please don't hesitate to reach out to us. That's what we're here for. We're always just a phone call or a quick click on chat away. If we don't have the answers, we have access to 19,000 members. Somebody out there does have the answer, and we will try our best to get it for you. Other than that, I hope everybody gets a chance to go out and enjoy a little bit of the sunshine today. It looks like a beautiful day, and I think we could all use some fresh air. Thanks,
Friday,
everyone.
in case
All right,
you don't
thank
know
you.
what
Bye,
day.
everybody.
All right, thanks.
Bye, guys.
Thanks, everyone. Have a great day.
You too.